Good afternoon. It's Tuesday, July 7th, 2020. It's 12 o'clock noon. My name is Les Solgrove, and this is week 27 of the year. And this week especially is a full one because I'm going to go over the review of the June market stats as well as what happened in this past week. And I guarantee you there's been a lot of activity on both sides. So welcome to the show. Joyce, glad to see you here again. Thanks for coming. And anybody else that shows up, this will be replayed at 3 p.m. at Facebook. So if you're watching this live, great, thank you very much. And if you're joining me at 3 o'clock this afternoon, thanks again for your support. So let's jump right in here. Because of the end of the month, I am going to go over some of the highlights out of the June monthly review. And if you want to see this entire presentation, you go to blog.simplydemoines.com, and that's my website. And you'll notice at that website that this blog or this graphic will appear at the top of that website. It's pinned there for the entire month. So when you come to that blog site, that's the top post, and then all new posts underneath that will appear. But at blog.simplydemoines.com is where the month-end review will appear. And so let's talk a little bit about what's kind of happened this past month. Now, keep in mind this is as of the end of June, so some of these numbers might look just slightly different when I get into the weekly stats, because the weekly stats are as of July 5th. This is as of June 30th. So there'll be a couple, since it's kind of a snapshot in time, it'll be just a little bit different. But the big thing I want to talk about today is our lack of homes for sale. This continues to be a major issue in our marketplace. And you can see that 2020, we've started off the year with, in the green and the dark green, 3,526 homes for sale in January. And we've kind of been on the downhill slide. We had March, we had a little bit of a bump up just before COVID hit. And that was kind of a time when we saw inventory start to rise just before we had our situation with COVID. But April, May, and June have definitely been on the downhill slide. And we're currently sitting, as of the end of June, we were sitting at 2,832 homes for sale compared to 3,822 homes a year ago. So, almost 1,000 homes at the end of the month short of where we would normally be. And you can see that typically we start to see our inventory rise as we go into the summer months and into the September, October is when it starts to go down again. And we're still on the downhill slide. So that just tells us that this market is still very, very active. And when I talk about some of the pending sales here in a minute, you'll see where that's going to come into play. As far as the median list price as of the end of June, we're almost spot on. A year ago, we were at $279,825 for our median list price, and we're at $279,900. So in my book, that's flat. We're pretty even. And last year the last couple of years we've seen these numbers rise, and in 2019 we saw it rise until April, till which point it started to go back down, and we're still kind of rising here in 2020. Just again, part of the odd market that we're in this year. So homes pending, again, at the end of the month here, the month-end report shows us that we're at 1,931 homes that went into pending in June, compared to 1,317. This isn't the actual counts. These are the actual, this is the number of homes that actually went into pending. So it's quite interesting to kind of watch these. And so we're going to kind of see what happens here as the year goes on here. Really pay attention here in a minute when we get into the last week to the weekly stuff, because I'll show you some real different things that have happened there in the marketplace. June 2020 closed sales by month, we're right on track with the number of closed sales year to date as that we were last year. In fact, we're just slightly ahead, even though this graphic doesn't show it, because this didn't take into account all the homes that closed right at the end of the month that didn't get put into the June bucket. So they will show up in July because of the way the MLS kind of works. But you're going to notice here we're at 1,436 And when we get in, when I show you the pendings again, it's just going to be real evident that we're going to just blow past July and August closed sales, because we have so many homes that are in the pipeline waiting to close. There's no way that we're not going to be way ahead of July and August in closed sales this year. June, the median sale price as of the end of June, again, is pretty much spot on, just like the median list price. We're at 225 this year for June, 225,750 last year, so just slightly lower. And I think some of this is to do with the fact that some of our upper end market is just not, not entering the marketplace yet. So the only places that people can buy is in this lower, under $300,000 price point, and that's keeping our median sale price down this year a little bit by month. But again, that's hopefully we'll see some changes in that. The median days on market, this is kind of an idea of how fast homes, or how long homes are staying on the market. Surprisingly, June last year, we were at 15 median days on the market. So really, homes were on the market about 2 weeks, and we're at 18 days as of June. Again, still very, very fast moving, fast paced market. And I'm not really sure why we have just a slight uptick in days on market, but it's 3 days is still nothing to sneeze at. 18 days is almost overnight for some of these sellers here. So I've got 2 spaghetti reports here that we'll talk about, and the only reason that I like to show these is because it takes you back all the way back to 2016 and kind of gives you an idea of what the market was doing back then. The purple bars is 2020, and of course that's back on market means the percentage of homes that did not make it to closing. And the month of June, we had 15% of our sales did not make it to closing, and that's pretty much, that's actually normal or slightly below normal. That's a sign of a very, very healthy real estate market, in my opinion. A year ago in 2019, we were at 20% of homes. So 1 out of 5 homes last year were not making it to closing, and this year it's only 15%. And you can see that 2017 was about the only other year that was a little bit lower than what we've had this year. That's that gold line showing there that we were under 15% in 2017. So we're kind of maybe following that 2017 trend line here. We'll just kind of follow that and see. But boy, still this 24% that you see in April, that's purely a product of COVID-19. And that's when a lot of offers kind of fell apart right at the very beginning due to the uncertainty of maybe job security, maybe some furloughs, some layoffs. Some people did lose their jobs. So it's not unexpected to see that was the month where we really saw our back on the markets, home sales fall apart. But we've certainly recovered from that, and going 17% in May and 15% in June. That's just awesome. We're doing a great job, and the market is just responding very, very well. The last of the spaghetti reports, this is the months of inventory, and which basically means how many months would it take before we ran out of homes for sale if no new homes come on the market. In June, it would have been 1.5 or 1.6 months of inventory. So it would have taken 1.5 months before we ran out of inventory, and that number is trending down. You can see in 2019, the kind of the orange one with the dot markers, I put that on there so you could easily tell 2019, we were out almost three months of inventory. So, this is just a testament to the low number of homes we have for sale. So this number probably will start to trend upward a little bit as we go into July and August, but maybe not in July just because of the shortage we're currently experiencing. So this is the end of month wrap-up report for June, and I've kind of grayed out a section. I realized just before I went live today that I don't know what happened, but I just didn't update the commentary. So this was commentary for June. That's up here in this upper left-hand corner. I'll update that and correct that, and it'll appear correctly on the reports here. But what this does show you is at the top, it kind of gives you an idea of the trending of the open houses. And week 23, 24, 25, and 26, that's the month of June. And we saw a little bit of a dip in open house traffic around Father's Day weekend. Always seems to be the fathers get the day off. I don't know, Mother's Day doesn't seem to have the big effect on open houses. So I don't know, just you figure that one out. But the for sale trending shows you that listing activity was definitely on the downward trend down here for the homes for sale, and the median list price was on the way up. And supply and inventory, that's driving pricing up. Boy, if you've never taken a class on supply and inventory before, supply and demand, this is an exact snapshot of what supply and demand looks like. When you have low supply and high demand, it's just going to drive pricing up. And pending activity is going the totally opposite direction. Where inventory is down, buyers are buying up the inventory, and we're going to see some pretty record high number of pendings here this year on the books. Currently, we are up 369 homes year to date closed over last year. And last year we sold just over 14,000 homes in the Des Moines MLS, and we're currently at 1,436. And so you can tell that the majority of our sales are yet to come here as the summer months come on. We're going to see quite a few homes. 1,436. I need to correct that. That's for the month of June only. 1,436. So about 10% of what we would normally sell for the full year here. And the median sale price is kind of flattening off a little bit at $225. And but it's just going to be really kind of fun to watch this as we move forward here. So let's jump now into end of week. So that was before. This was end of month. That was the end of month report. That all can be found at blog.simplydesmoines.com. But now we're going to look at just what's happened again in this past 7 days. So this is as of July 5th, which was last Sunday. That's my cutoff date. And this is a report that I keep coming back to because it's showing quite a difference in our market. And this will be one of the first indicators of when the market's kind of correcting, is when we start to see the homes for sale kind of trend back upwards. And the light green, each week I show you the light green is 2020 homes for sale on a daily count, and the dark green or almost black is 2019. And you can see back here in March when COVID-19 hit, we were pretty close to being right on track. This is where we started to see that inventory just start to bump up, where we thought the market was going to just take off, and then COVID hit. And inventory has pretty much stayed flat through the month of March into the middle of April, and then the buyers just descended upon the market. They were already out there, but they really descended at that point. I think it was warm weather and just time to get out. And you can see that as of the end of July 5th, that's our point here, 2,816 homes were on the market compared to 3,827 a year ago. That's just over 1,000 homes difference. I don't have any clue of when in any other time that we saw such a disparity year over year of such low inventory to high inventory. We've seen it the other way around, but not turning into a low inventory. And this is going back 11 years. In fact, let's just look at this going back to 2009. The last time we had such low inventory was in 2017 when we had 2,887 homes for sale. And July 5th so far, we're at 2,816. So we're at 11-year record low home inventory. And, when will this turn? If you look at this, it's pretty steep drop right here. That would indicate to me that, you see the previous years, it kind of levels off and has almost like a U. We call this, you've heard about the U recovery of the market and the V recovery. Well, if we're going to have a U recovery, it's going to be low for at least another 30 to 45 days. And so just keep a good eye on that. We'll keep watching this number here, 2,816. Just wow. We really need more homes for sale. Last week, I talked a little bit about maybe some hopes that some of the higher end market pricing homes were coming onto the market. And you can see right about here on the right side of the graphic, we started to see this upward trending where we had over, about 285,000 median list price. and it's dropped this week. And it didn't drop because the homes, this is actually a good sign. This is showing me that the higher priced homes came on the market and the buyers are buying those up. So of course they buy up that higher priced inventory. Well, what's that going to do to our median price? It's going to drop it again. So all those homes that kind of came on the market this last week at the higher price point are being snapped up. And as a result, without that inventory in the trending here, you're going to see that it does drop back down. So one could look at this and go, oh my God, prices are dropping. No, it's just that the median list price of homes is actually just being consumed by the buyers. And this is just going to do nothing but feed that pending, those pending numbers again. So let's take a look at the pending numbers. Again, going back to January, this is 2020 versus 2019. The light orange or the orange is 2020. The darker is 2019. And here we are back in March when COVID hit. We were already well ahead of last year with our pending sales by about, 400 or so homes more. And, as the year went along, we had a little bit of a dip, but not very much. And now we're continuing to rise. We're at 3,587 homes in sale pending versus 2,475. Again, that's over 1,100 homes difference. Just crazy that we see this kind of disparity over year. If we look back, going back to the 11 years, the last time we saw a 11-year or a 10-year high at that time was back in 2016 when we had 3,246 homes waiting to close. These are homes in sale pending. And remember, we're still losing right now, we're losing 15% of those homes because they fall apart. We're still well above, where we were a year ago, or since 2016. This year, we're at 3,587. This is a brand new record that I don't know if we'll ever top this when we get through 2020. This is a huge number of homes in the sale pending bucket right now. So I mentioned before, we're going to see a lot of homes sell and show that our closed sale inventory is going to rise in July and August. And this is because we have all of these homes here for sale. We kind of look here, this is kind of a little anomaly right here. You see that little dip. That's when COVID hit. That's when we kind of saw the homes kind of just slow down just a little bit. When we're looking at it at this level, it's kind of compressed. So it's even more evident that we had a small dip, but years from now, we'll look back and we'll say, in 2020, what's that dip? That's where COVID-19 hit, and this is the result afterwards. So we're really in a strong real estate market. We just need more homes for sale. How many homes do we need for sale, do you ask? Well, currently there's 1,382 single-family resale homes on the market as of July 5th. We would need an additional 3,570 of those homes in that category alone to come onto the market in addition to this 1,382, just to bring us up to a balanced market. And remember, a balanced market is when we have between 4 and 6 months of inventory. We could literally use 3,570 more homes on the market, and I believe that the buyer inventory would eat into that really fast. So is it going to happen? Probably not. It's just going to be unrealistic to think that we're going to get 3,500 more homes on the market. But boy, if we could even have 1,000 more, it would make a huge difference in the market, especially in that above $300,000 price point. We really need some more of those move-up homes to come on so that we can allow those move-up buyers that are kind of sitting there waiting to have some place to move up to. And the first-time home buyers that are looking for that first-time home, they're still there. Everybody wants to take advantage of that, record low 3% 30-year fixed rate mortgage. So who can blame them? This is the condo townhome resale, same graphic. We're 275 homes currently on the market. We need another 550 to bring us to a balanced market. So not nearly as deep of a shortage as we were in the single family resale. New construction. We spent most of the springtime market in a very, very even balanced market, and the builders have kind of probably had some lots out there just waiting to go. And boy, when the market picked up, they started to answer the call for new construction. And you can see that now we are in a shortage of new construction homes with 747 new on the market. We could, to get us back to a balanced market, we need about 430 more. I really don't see that happening because builders are smarter than to, flood the market with new homes that then would end up sitting for over the winter months. But just tells you the strength that we have in our marketplace right now, especially in the new construction. Condo townhomes, this is the last of those four categories that we talk about. 412 homes currently on the market. That is absolutely the perfect number of homes to be on the market right now. If you're a buyer looking for a condo townhome, you're absolutely having no trouble finding a new construction townhome. Obviously, the price point's going to be up there because it's new. But, if you miss out on the one you love, don't worry. There's going to be another one out there because we're right at that sweet spot in our market where there's a balanced market. And so good job, new construction builders out there. You're doing terrific in that area. So this is a graphic that's brand new here, and I introduced this last week after the end of the month, and I'm going to update this now on a monthly level. Someone asked me, and this is how most of my graphics come out. They asked me, where's our shortage? They asked me a question, and I think about it in terms of how can I visualize that answer. And someone asked me last week, they said, where is our big shortage, or where are the number of homes that are most short for sale? Where can we really use more homes for sale? And so what I did was I created this homes for sale inventory by price range. So it's broken down by $100,000 price points across the bottom here. And then it's also broken down by month. So for example, in the month of January, this tells you how many homes were on the market in the under $100,000 price point. There were about 225 homes for sale. This is across the whole MLS, new construction, resale, everything. And you can tell that, the market really woke up in February because this is where we started to add inventory. We went from 225 homes for sale in January to over 825 or close to 850 homes for sale in, I'm sorry, this is, no, I got that wrong. This is in the $100,000 to $200,000 price point. Each month you can see here in this under $100,000 price point, we saw a little bit of a drop each month, and the market is really kind of buying up the inventory. This $100,000 to $200,000 price point, as we start here in January, it drops dramatically. You can see that we went from in January having 830 homes for sale, all the way down to about 500 homes for sale. And 200,000 to 300,000, we didn't see nearly this drop, but we are starting to see some of that upper end stuff kind of start to sell. So, if you are thinking about selling your home and you've got a home that's in that $300,000 to $400,000 price point, yeah, you're going to have fewer buyers for that, but they are starting to sell. Versus you get into this 400 to 500, you can see that the home inventory levels are pretty flat, and actually they're rising in that 5 to 6. So how does this look on a sale pending graphic? Let's just take the next slide and look and see here in January. These are the same breakdown, and the same breakdown by month and by price point. And you can see that this is the number of homes that actually are under contract now. In January, we had just over 100 homes for sale in that under 100,000. That started to rise just slightly as we went through the year. But look at this $100,000 to $200,000 price point and $200,000 to $300,000 price point. Starting out in January here in the blue, and you can see that by the end of June, this is the number of homes in pending. This is where most of the activity is. Even that $300,000 to $400,000 price point, like I said, is really where we need more inventory, because this is where all the activity is. We need places for these move-up buyers to buy. And you kind of look over here, these 6 to over $1 million, those numbers look a little bit flat only because there just aren't as many buyers. So it's not really as dramatic of a view as you go over here. It's nothing bad about that. It's just that it's just not as dramatic because it's, there's not that many homes that go into contract. But this is kind of just an interesting graphic that gives you an idea of where the activity is by price point by month. And I'll really like to watch this as we move forward. Open houses. Here we go. Open houses this last weekend, 4th of July. Almost everybody stayed home last weekend with open houses. Only 150 were new construction, 68 resale, and I would assume that many of those were vacant homes. So watch this number jump next week as we go forward. The dashboard, again, this is my basically my weekly dashboard of everything that's happening in the real estate market for the previous week. You can see that we've hit some milestones this week. We hit over 5,000 homes closed year to date on the resale. We're very close to hitting 7,000. In fact, we already hit 7 after July 5th. So we're just at or close to 7,000 total homes for sale. Again, we closed about 14,000 homes last year. We're right on track with the midpoint, and this is just going to go up because of all the homes that are in pending status here. So last week I said I'm going to kind of stop this weekly report on a weekly basis and just go to once a month. And I heard some, I got contacted by several agents and consumers out there saying, this is valuable. Let's at least keep it going through the month of July and see what the market's doing. And so I will continue to do this weekly, at least through July. We'll kind of just play it by ear. And who knows, maybe we'll just keep it going weekly. But so the next week's report will come out next Tuesday, July 14th at 12 o'clock noon. And I try to get a guest on here so you're not having to listen to just me. Maybe if I can get an appraiser on to give us some ideas of what things they're having, that's kind of my goal here. So if you're an appraiser and you'd like to join me next week, reach out to me after the show today. And I'd love to have your perspective to talk for 10 or 15 minutes about the challenges you're seeing in the real estate market with such low inventory. Other than that, it's been great. Thank you guys for coming by today. I've got a few guests today live, and then we'll see many of you show back up at 3 o'clock this afternoon on the recorded view program. And I'll see you next Tuesday, July 14th at 12 o'clock noon. Thanks for joining and have a safe week. Talk to you soon.